Welcome, M. Solomon here, your judicial and non-judicial foreclosure accountant, auditor. Glad you could join us. You want to get a hold of me if you need an audit, if you're looking to find out what's really going on in your file. That's what we do best. I have 30 years in the secondary. You can reach me at 202-270-2641. That's 202-270-2641. You can see the number up there. And my email address is secondarytradedesk@gmail.com. Got a great presentation for you, a case that you may have seen before, but I'm going into a little more detail, and I think you'll be shocked at what you're about to see. Leave a comment. And thank you for all the new subscribers. Thank you for joining us. I'm trying to make these as interesting and as compelling as possible without getting too technical. It's complex litigation, no doubt, if you're in foreclosure, no doubt. A reminder, we are accountants and auditors, not attorneys, and this is not for your legal rights and property, but we can do everything from do the audit, accounting, and see and determine if, in fact, that's a mortgage or something else, which we suspect. Special thanks to Corporate Music. Let's get this show on the road. Well, what we have here is a failure to communicate, or maybe a willful effort to conceal communication. Take a look. We have a file account number, and that was listed on the bottom of the complaint. On the complaint, which I thought was strange. I mentioned that before. Haven't seen it since. That's not true. I've seen it a couple of occasions. So what I did was I entered the file number. And you can see it right there. And through trial and error and having a lot of time on our hands, I came up with an idea. What if I, dates, let me back up a bit. Y2K, dates are numbers and numbers are dates. And there's a sequence of numbers that the computer recognizes as a date. I'll get into that in a minute. But 53174, the account number, I decided since I know that's a date, I'm going to subtract out the borrower birth date. And what I came up with was 31679. And that, I believe, are the number of days in this individual's life. It's a mortality rate. 31679, divide that by 360, which is a bond per annum, bank per annum. Banks pay on 360. They charge on 365. That's a margin or spread they make. So the number of years this person is estimated to live is 88 years. How nice. Mortgage, mort, en français. Death. So I believe that has to do with an annuity, an annuitant's table. Now what I did was I took that number again, 31679, which are days, and I converted it into the annual debt service. And sure enough, that's the weighted average coupon, the weighted average rate the borrower pays on an adjustable rate loan over 30 years. If I capitalize those two, some people call it monetize, I call it capitalize. Some people call it money from thin air, I call it capitalize. 31679. Capitalized by 5 1/8 the rate. That gave me the loan amount, or the least amount that's in controversy as the outstanding balance shown on the servicing statement, 618-00581. You with me? Let's dig a little deeper. And in an effort to keep things going fast and not, I appreciate you watching, and I thank you for subscribing, and especially for the comments you're starting to leave. And I respect your time. I know if we can get to the point quickly, and it's something you can take with you, and if you're in foreclosure, maybe sit back and say, how would this affect me? I'd be more than happy to take on the audit, and this is what we're looking for. But again, remember we subtracted the two numbers. We took the 53174 file number, recall, and we subtracted the borrower's birth date, and that gave us 31679 days. It gave us 88 years. It also gave us the annual debt service. So when I divide the loan amount, or the outstanding balance in foreclosure that's in controversy, when I divide the outstanding balance, I divide it by the number of days, 88 years, annual debt service, let's just say annual debt service, amount the borrower pays annually, that gives me 19.51 years or installments, I'm not sure. Let's say years. So I took 1951, multiplied it times 360, which is a bond per annum. Bonds and banks, they pay on a 360, charge on 365. Okay. 360 times 19.51 installments gave me 7,023 days. Well, all right, I don't know what that means, but Let's keep going. Right here is the number again. Subtract the two numbers. We've got 31,679. And what I did was I added the number of days. Okay? Remember, annual debt service going into the amount outstanding, give me 19.51 annual payments or installments, 360. That gave me the number of days. So now I'm taking this number, 31,679, the difference between the two. Remember the file number and the borrower birth date. And the 7023 days, right here. And that added to this number gives me a date. That's your Y2K. Remember, numbers are dates, dates are numbers. So that's a date. If you add 702301 to it, look what I got. Loan closing date. Date the loan closed. Huh. So what we're doing is we're working with three numbers. The file number that's sitting on the face of the complaint, the borrower birth date, and the difference is the number of days. Subtract the two, we got the number of days. And that number of days has a corresponding date attached to it as part of the Y2K. It's part of the computer bug, Y2K bug. The date concealed in 31679 is 9/24/86. So what I'm saying is 618,00581 divided by 19 and a half years using 360 in days. That takes me from the closing date back to 31679 or 9/24/86. That would be a bond being credited to the mortgage origination. It appears to be a bond that would be linked to the mortgage origination by backdating to 9/24/86. So again, we're dealing with the number 31679. We subtracted that from the file number minus the borrower birth date is 31679. So that really means that the file number minus the borrower birth date equals 31679. And that means it can mean a lot of things. Let me show you what else it could mean. We divided it by 360. Number of days, that give me 88 years or 88 per diem. Which one is it? 88 years or 88 per diem? Well, if you divide 360 into 31679, and give me 88. And that's again the 702301 days. As we said, that took me from 12/31/679 to 12/16/05. But is that a per diem, or is that the number of years that we're looking at? Which one is it? So what are we talking about here? More AI? Is it a technology at work, or is it a coincidence? You be the judge. Be sure to leave a comment. But what we're talking about here is a timing and value. I can say that again. Timing and valuation scheme. Let's take a look. I got a file number, as I said, which is on the bottom of the complaint. That's where I picked it up. I thought it was strange where it was situated. They had a file number, 53174, as you can see. That converts into a date, 7/31/45. And I took 30 years. Again, as an auditor, you're running all different kinds of scenarios here. I backed out 30 years on the mark. And look what that took me back to. Event date, 7/8/2015. What's an event date? I'll show you. What happened? Trading on stock exchange halted for computer glitch. Trading on the stock exchange halted for computer glitch. That was July 8th, 2015. Talk about something sacred. You imagine your stock is starting to soar and stock market just has a computer glitch and stops. Or maybe a third world country, their stock was going to, bond prices were going up or down, or it's suspicious. And what's interesting is it's tied to 53174 or 7/31/2045, which is the file number on the face of the complaint. 30 years to the mark. 7/31/45 backdates to July 8th, 2015. Borrower was certainly in foreclosure at that time, still is. Coincidence, maybe. Let's keep going. There we go. So let's recap. You tell me. Please leave a comment. Let me know what you think. Coincidence, by design, AI. Keep in mind, this is part one. There's a part two to this second chapter. We're not done yet, but let's recap. We entered the file number that we found on the pleading, and we subtracted out the borrower's birth date. When we subtract the two numbers, that's what we came up with, 31,679. Divide that by 360 bond per annum, we get 88 years. Is that really 88 years? Let's find out. We subtracted the two numbers, 31,679. We factored at 5 1/8, a little over 5 1/8 for the weighted average coupon. And that gave us the loan balance, which is the amount in controversy borrowers being sued for 618-00581, judicial foreclosure. Again, when you subtract these two numbers up here, the date and the number and the date, and we divide the loan balance by that number, we get 19.51 installments or years, using 360 again as a per annum. I think it was 7,023 days. So when we use that number up here and subtract out or add back 19 and a half years, it takes us right to the closing date on the mark. And that 31,679 we discovered is actually a date. Date is 9/24/86. So what you have is on 12/16 the loan closing with a credit that's backdated to 9/24/86. Interesting. Again, subtract the two numbers, number and a date, divide it by 360. We get an 88 per diem. I thought that was 88 years. Well, now it's 88 per diem. 88 per diem times 7023 gives us the 618-00581. And what we found out is that 53174, it really is a date, 7/31/45. And interestingly enough, it backdates 30 years to the date the stock market crashed for about 3 or 4 hours. 7/8/15 is when the stock market and the airlines industry's computers had a glitch and they stopped working. Part two coming up. What I'm going to end on here is the capitalization of a trust and how this borrower's loan fit into that. Not just the loan, but more importantly, the property. Take a look. I'm interpolating. I'm going backwards, so it's going to be a lot easier for you to decipher how I did this. Let's get our pointer out there. The deed or mortgage is the first line. I've got deed, price per share, capitalized, and number of shares. So the deed was, I believe, used to transfer title, and I gave it a price per share of 125. Why? Because I like that number? No, I backed into it. But you see 125, that's right on the mark. That's not 125 and 10 cents or 19 cents or 124.98. That's 125 on the mark. And look what that equals. That's the purchase price of the house. So if I divide that capitalized home value, some people call it monetized, I call it capitalized. If I take that home's value, divide it by $125 a share, it gives me how many shares? 5863. See if you can figure out how I arrived at these numbers. So next thing I'm going to do is I'm going to use the paid-in capital. So what if the paid-in capital was $25? Well, that 25 times 5863 or 146,575, which is what the borrower brought in as cash. So maybe that's a better way to figure it. Take the amount of money the borrower brought in as cash and divide it by $25 a share, or 5863. See what I'm saying? 25 times 5863 shares. It's all easy now. And that's the amount of cash the borrower brought in. Now, if I subtract the price per share of 125 and 25, that should give me a par price. Par price would be $100 per share. Sure enough, $100 per share, 5863 shares, that's your loan amount. And sure enough, the loan amount plus the down payment equals the capitalized value. So the heading here is homes taken to capitalize a REIT, real estate investment trust, and it is. What you see here is the note was canceled right there. And the shareholder value is based on the contribution of the property. The property was taken up front in advance of a scheduled default. That's how I like to word it. And your par price on that stock was the note that was canceled and converted into shares, as well as the home. I think I'm right on target there. The court's going to be hard-pressed to discount this one. All right. And as I wrap it up, as I said, I'm going to have a part 2 that I hope to have complete here in the next, by the end of the week. And I think a lot of this ties back to the Tax Reform Act that was under the Reagan administration with George Bush Sr. as vice president. And, of course, he followed Ronald Reagan. And a lot of things that I see being unwound or being dealt with 30 years later. Let's see, 86, 96, 96, 2006, and then 2016, which was when the foreclosure in this property took place, sale. Bar still in the house, go figure. But 86 was the Tax Reform Act of 1986, and it was passed by Ronald Reagan. And one of the things I noticed was it actually decreased the number of tax brackets, reducing the top tax rate from 50% to 28%. That was a huge hit to the United States budget. And of course, let's see, it also dealt with the lower income families in the United States, 6 million lower income Americans that were removed from the tax base. So between that loss there and that loss there, I think by the time Bush Jr. got into office, he was already seeing the effects of long-term effects of this passage of the Tax Act, Reagan's Tax Reform Act. And there's other reasons why I believe this has something to do with the foreclosures, and we'll get into that next time. But for now, hey, that wraps it up. If you're interested in one of our audits or you'd like to get more information, please feel free to call me, and or someone from our office will make sure they return the call, and I will be available to you at any time. What I'm looking for is your payoff demand. Get me a payoff demand. I'm looking for your year-end monthly statement. Any monthly statement will work, but year-end's usually the best. We're looking at the judicial filings. If you have a filing, if you're already in foreclosure, I'd love to see that. If you have a HUD-1, that's important. A number of reasons. I haven't gotten into that yet, but a HUD-1 would be nice if you have it. And what we'll do is reconstruct the general ledger and help your attorney or help you prepare the counter-argument or counterclaim if you, or claims if you're going to bring an action against the lender and beat them to the court. Again, we're available for audits, and I'm M. Solomon, accountant, auditor, 202-270-2641. And you can also write me and send me whatever documents you have, scan them, send them over to secondary trade desk at gmail.com. Thanks again for listening.